Welcome to Money Matters TV. My name is Paul Mitchell. I'm the Chief Credit Officer of Upland Business Capital. I'm the host for the show, and I'm joined by my co-host, Mike Dever, who's the co-founder of Brandywine Asset Management. Mike, welcome to the show.
Thanks, Paul.
So we were talking a little bit about some of the current economic and business activities out there. And one of them that's kind of struck me, we thought we might talk a little bit about it. It's been going on for at least a few years, maybe even more than that. It's this whole concept or this thing called cryptocurrency. Mike, can you in 10 words define cryptocurrency? Maybe 20 words.
20 words. It's not really a currency, but they're markets that are set up that people can trade that can also be used as a medium of exchange.
So it can be used as money. People can buy a car with it, or
it's just starting to be able to. I mean, for the last decade, for the most part, there was very few places that would accept Bitcoin, for example, or the other cryptocurrencies in payment for something. But just in the last month, Tesla's announced that they're going to start accepting payments for cars in Bitcoin as well. What's interesting about it, though, is that they'll accept it in Bitcoin, but ultimately everybody ends up converting back to some sort of a local currency like the US dollar. Yeah. So the money, with only a handful of people, really not a handful, but the majority of people still convert that to dollars and use dollars on everything else that they're spending money on.
But the Bitcoin thing has been quite amazing in terms of valuations and stuff like that, for going up with thousands and thousands of percent in the course of a year or two and things like that. I mean, why is it? What is it? I mean, is it diamonds under the earth and stuff? It's hard to get to, or what?
Well, it is a perfect speculative market in the standpoint that there's really no way that somebody can sit there like evaluating a stock or a business and say it's likely worth this. There's or even metals markets. Well, if it's too expensive, it can't be used in whatever product it's going to be used in. So there's a sort of a ceiling on pricing. With the cryptocurrencies, there's really no floor or ceiling. It's just what people are willing to pay for it. And because the currencies almost across the board have a limited number that are going to be created and be able to be used, if the demand goes up, and just from people talking about it, for example, or seeing it in the news, or Tesla buying some to have it to be able to use it as exchange for people buying a car, since the supply is limited, the price is going to go up. And that's what we've been seeing lately.
So do you have clients, or do you know anybody that invests in Bitcoin, or what do they call it?
So we actually had a Bitcoin, not just Bitcoin, but a cryptocurrency mining operations here at our office.
Mining?
So you create the currencies by running algorithms on high-powered computers, and after they solve an algorithm, you get allocated some currency. So we had a mining operation going here for maybe 3 or 4 years in the mid-teens, and we're actually mining Bitcoin, with that. But it's become such a energy-intensive process. It's really moved to low-cost electricity locales, some in China and other locations. So we've had some experience with it, but beyond that, ourselves, we're not speculating in it anymore, and our investors are not as well.
Yeah, well, that's pretty interesting stuff.
Yeah, it's a wild industry. It's a wild market.
Yeah. So what other things do your clients talk to you about?
Yeah, well, so the one thing that did come out, I started getting calls not just from our clients, but just friends, family. 2-3 weeks ago, last month, with the whole GameStop saga.
Oh, yeah, right.
Yeah, that was just a period where it's another interesting combination of events where you had limited supply and hyped up demand, and where in that situation where you had short sellers in GameStop and other stocks, and people realized that they could put these people under a lot of pressure by pushing the price up. At some point, they'd have to cover their short position to actually buy stock themselves. And that's why you got this, multiple, like 50x multiple.
So just tell our viewers who may not all know what shorting a stock might be and calling it and all that type of stuff.
Yeah, so most people are used to buying a stock. You can call your broker and say, hey, I want to buy GameStop. stock, for example.
Hopefully it'll go up in value.
Right. I think it's going to go up in value. I like the company relative to its price now. I want to own that stock. And so you can even buy fractional shares now at different places. But so if you did that a couple months back, you could buy GameStop stock at $10 a share. Mm-hmm. But there were also other people that were looking at it, and in large part, professional investors, big hedge funds, for example, that said, you know what, this is expensive at $10 or $15 or $20 a share. They have the ability of shorting the stock. And you do that by going to the broker and saying, find me somebody that's bought the stock, loan me their shares, and then I'll sell those. And so it's borrowing from the long side and then selling it short. And so there was a fair amount of short selling that went on in the stock.
So if the stock actually goes down in value,
they make money if that happens.
Because I can replace the stock with the stock at reduced value and give that to the person I borrowed it from.
Correct. I'll buy it back at a cheaper price and give it back to the person I borrowed it from.
Nice.
And so I've sold it at 20, I buy it at 10, I made money. What happened in the case of GameStop is when it got up to $50, $100, $150, $200, these guys that had shorted it at 20 were losing billions of dollars. And so they coughed it up. They essentially bought it back at any price.
So it wasn't necessarily because these people who were bidding it up thought the GameStop was just a wonderful company going to make huge amounts of money, but they were playing a game, shall we say,
right.
GameStop.
Absolutely. It turned into a game of GameStop. And what happened there was that the original analysis and people that bought it because they thought it was going to be valuable, maybe it was underpriced, they realized that on Reddit, for example, and in these different communities, online communities, that there were people that were saying, hey, there's a big short interest here. We can stick it to the guy now, stick it to the man. And so if we buy it, they're going to lose a lot of money if it keeps going up in price. So they got all these other people coming in behind them, paying, not even knowing what they're doing, but doing it for a reason that was not even financially motivated. Mm-hmm. It was to stick it to the man. And unfortunately, a lot of those people either have or will lose a lot of money because the stock will not be supported at $100, $200, $300 a share. It's just at some point will come down, and they bought it there, and they're going to lose a lot of money on it.
Well, interesting. We just wanted to give our viewers some of the perspectives of some of these stranger parts of the market, and they may hear about investment opportunities and that type of thing. Yeah,
definitely speculative.
Just be aware. Be aware.
Yeah, exactly. This is definitely a speculative area of the market. That you start seeing that, when markets are moving up like they have and people are making a lot of money, you start seeing some of that froth in it, and that's what we're seeing here.
Right. Okay, so be caution, and as we always say, seek advice from, I would say, more than one advisor, more than one professional.
Yeah.
Get some different
Nobody has all the answers.
Yeah, exactly. Very good. Well, we've got a question from one of our viewers, and Janet Norton of Philadelphia asks, I think this is right up your alley, Mike. Do you think bond prices will rise over the next year? That is, you have a magic wand, a crystal ball.
Exactly. So my answer, and what I answer pretty much with any market prediction, is yes and no. It's so hard to tell. Bond prices, first of all, that question, bond prices moving up implies that interest rates are moving down because bonds move in opposite direction of interest rates. So if they mean do interest rates moving up, that means do they think bonds are going down? It's right now we've had a big rise in interest rates, one of the larger, faster rises that we've had in the last few years, where you had the 10-year U.S. Treasury trading at about 0.5% in the COVID crisis, and now is at 1.5%. And most of that 1.5%, half of that just came in the last month. So rates went from 1% to 1.5%. People are anticipating maybe renewed inflation, which means they're going to need to have higher bond yields, higher interest rate to offset that. And a lot of that caused by the fact that we've got another $1.9 trillion stimulus coming our way. So there's a lot of money going into the marketplace that could cause pressure to bond prices and increase in interest rates. At the same time, we've had a big run up here already. That may not continue, but right now that's the trend. The trend is for lower bond prices, higher interest rates.
Yeah, but over time, things will change.
Absolutely.
6 months or 12 months or 2 years or whatever.
Right.
So just be aware and stay on top of these things. Well, that's a good question, a good answer, Mike. I appreciate that. Now, in this part of the show, if you viewers would like to know how they can ask a question, Money Matters TV, this is how they can do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
That moves us to the second part of our show, where we interview a featured guest. And today's guest is Lucinda Duncalfe, who is the CEO and founder of AboveBoard.
Hi, Paul.
Hi, Lucinda. Thanks for joining us.
Thrilled to be here. Thank you.
I know you've been a successful entrepreneur and leader for a number of years. And we're going to spend a little time to sort of review some of that and get some of your perspectives on why, how, and what you're doing now. So just if you could just briefly give us a little background, what's your story?
Yeah, so my story starts, I guess, right out of school, undergrad. I ended up working for a startup in San Francisco way before that was a thing. I started as a secretary working for a vice president of sales. And like many, hey, it turned out great, right? One of the wonderful things about startups is they're growing quickly. And so young people have lots of opportunity. I went back and got my MBA, worked for a couple larger companies, including an asset management firm called SEI Investments.
Sure.
And then jumped back in when the internet started, worked as a product manager for a very early internet company. We took public in 1996. And then I got in as a CEO at my first own little startup, which was a company called Destiny Software that was in the financial services space.
Very well known.
Which we grew successfully. And next after that, I co-founded a company called Turntide, which was an anti-spam company. We sold to Symantec. And I've done a whole series of those since. It's really my passion. It's what I love to do. But I will say, I thought I had retired. I really, really thought I had retired. And then this opportunity at AboveBoard sort of came to me and I came to it all at the same time. And so last year I started off on this latest venture, which is a company called AboveBoard. It is an inclusive platform for executive hiring. So it's a new way for executives or board members, directors, to connect directly with companies.
If you can, then tell us a little more about AboveBoard. I know it's a real focus on providing diversity in executives and boards. How did you come with that? Whose idea was that, and how are you executing on that?
Well, I'll give you a little bit of the background because I think it's always interesting to people how these things come together. It usually is not some grand aha moment and you patent something and you get on Shark Tank and off you go. That's really not the typical story. The typical story is people, you're working together, you see an opportunity, and that's what happened here. So there's a very fast growing executive search firm called True Search. They're the fastest growing large firm in the world. I think they're number 8 or 7 in the Americas. So it's a very large firm. We had used them at Monetate, which was the last company I ran. And I started working directly with them. They're very innovative and had made a lot of investments in software, which within that industry is rare. It's a professional services industry where clients pay basically for people. There's not a lot of tech enablement and that sort of thing. This firm, True, however, is very innovative. I started working with them on a platform they had built that was basically like a Salesforce, but just for executive recruiters. And they helped me see the way this industry works. So I think most people don't realize when a board seat opens at a company or a very senior vice president and above, typically role opens, those jobs are not posted on LinkedIn or Indeed or any of these platforms. The way those jobs are filled is either people hire a retained executive search firm like True. It's quite expensive. It's usually 1/3 of cash compensation for the first year goes to the executive recruiter. If you don't want to do that, And often people will actually start the second way, which is they leverage their own networks. So I've been in the boardroom many times where we're sitting there and somebody, we want a new board member, and someone says, "Oh, I was talking to Joe last week. I think he might be great." So it's the people you know. It's also true on the executive recruiting side that it's the people they know. So they build these networks, and when they get a listing, right? They get an opportunity with a company. What they do is they reach out to the individuals that they know. So the commonality of those two approaches is they are based on existing networks. It's who knows who in the existing networks. And the reality is, because we're all human and we tend to hang out with people who are like us, those existing networks are exclusionary. There just aren't many women, aren't many Black, aren't many Latinx executives in those networks. At the same time, you have a real true drive to hire more diversity. If you haven't seen it, there's repeated research that shows you'll get somewhere in the neighborhood of a 20% performance lift with a more diverse board and executive team. So there's a real, plus there's societal issues, right? You want a team that looks like your consumers, et cetera. So there's a real drive towards diversity, and yet none of these options that are out there work. And so I saw that, and we were working with True Search, and we decided to co-found AboveBoard, which is an open platform. So executives who are VP level and above can join. It's free for them. When they join, we vet them. We ensure that they are of that level. And then they can see all of the openings. We have over 600 openings today for board and VP level. Plus, they get to then express their interest. So versus the existing ways where you sort of sit around and wait for someone to reach out to you, or you tell a few friends, now you can go and see what's there and proactively reach out to the folks that are hiring. So that's what it does. That's how it addresses diversity, is it's just opened up. Lots of straight white men are on the platform too. That's great. It's inclusive. It just opens up across networks so people who want to meet each other can.
Well, just for discussion purposes, what's the difference between that and LinkedIn?
So the reality on LinkedIn is companies don't list their executive positions there. It's too public. And the reality is, I don't know what your LinkedIn looks like, but there's so many people who are just not in that group that you would want to identify. So what we've done is we've shrunken the group, and then we again empower that executive to do the outreach.
Interesting.
So if somebody like me wanted to serve on boards, is it available for that?
Absolutely, Mike. I was going to hit you up after the show.
There we go.
Suggest that you join. Yeah, we have a few not-for-profit boards, and we're going to do more and more of that. We're happy to do that pro bono. If anybody out in the viewing audience has a not-for-profit board that they'd like to build, and we also have. There you go. It's perfect. We actually just recently placed an executive at a diabetes foundation, for example. Okay. And there's also most of them, though, right now, most of them are for profit.
How do the people find you that are that are looking to serve on boards?
So a variety of ways. First of all, we are very tightly partnered with True Search. So True helps us to bring the people that they know on, which is fabulous. It's also true, though, that they're like all the search firms, their membership isn't particularly diverse, but it's a great way to start. We've had some press, which has been helpful. And then we're forming relationships. We have a handful so far with associations, professional associations, where the women or people of color gather. And they like it because it's a way to surface these opportunities for their members. And we like it because it helps build the membership base. And then it's primarily word of mouth. So we grow about 20% a month, just word of mouth. And so obviously, as you know, the power of compounding works for this too, right? It just grows and grows, and each month, 20% is a bigger number.
So if I may ask, how does your compensation arrangement work?
We get paid by the hiring company. So we're a platform. The company pays us a subscription fee like they do for a Salesforce or for any software platform.
Okay.
And then if you recall, I said there are these two options, retained search and using your own network. You can think of that as all or nothing. So in a retained search, you get personalized full service. In doing it yourself, you get no service. We have options in between those two. If you've paid for the platform, you can also pay additional to have some more services. So some hand holding, but not what you would get with a full retained search. And there's an upcharge for those.
So what was so compelling that you came out of retirement to found?
So I tell you, Mike and I, when we were in the green room beforehand, we're saying, wow, it's been a long time since we've seen each other, probably 15 years since we've met. I've been doing this a long time. You know, I'm a woman's female CEO in tech. I run venture capital backed companies. We haven't raised venture capital yet, but we will. And women-led companies get less than 2% of venture capital, right? So not like 20%, 2%. So you can't tell me that there's only, you know, 1 in 50 of us is as good as the guys. The reality is I've experienced this myself. And I think that there's unlocked. I'm also a deep capitalist, right? I went to Wharton. I believe in the capitalist system. And I tell you, it's a sin that we have all of this talent and productivity locked up. So I believe in it as a way to grow the economy. I believe in it in fairness, and I've experienced it myself. And so I just have a huge amount of passion about this. I also can tell you, search is a $21 billion industry. Today, only about a third of executive placements go to search. So it's a huge market that today is untapped.
Yes, you don't need to be taking a meal from your competitor. You just expand that market.
That's exactly right. And I've been a CEO hiring, right? So you start and you go like, I don't really want to, you know, I'm hiring a VP of finance. Do I want to pay $100,000 to do that? I probably don't. Right.
The move now back from retirement to entrepreneur.
Yeah.
I can see how you're compelled to do that and how you want to do that. Are you doing it differently this time than you did with your past startups? Are you balancing?
It's such a good question, Mike. I am definitely different. So one of the things I learned when I was in retirement was I'm not very good at that. You know, I'm a born operator, I think. I love the process of building companies. You know, you have your bad days, but I'm happy every day that I'm doing this. So I think that was the first thing I learned. And I don't know whether you've seen this. I think we're about roughly sort of the same age group. I see my friends fall at our age into one of two camps. They either sort of fold up the tent and move to Florida and whatever, or they're actually more engaged, more energized, because we have, I think, this wealth of experience to bring. And I hope I'm in that camp. And so I think the single biggest thing that's different at this age is I'm calmer. Right. So as an entrepreneur, you have to have some drive and but I have more perspective. And so it's just easier to sort of have a sense of, well, that's a problem, but it's not a 4-alarm fire. I think we'll get to that later. I also will say in my cohort of entrepreneurs who are about my age and have done it repeatedly, when we were younger, I've talked to some about this. When we were younger, we talked a lot about strategies and software things and all this. Basically, now we talk about people, right? We talk about our board members and what they're like, and our management teams and our investors. And I think that is something you really learn with age, is how critical the people are, right? And how to manage those relationships in a much more mature way. So I think that's what's really different. I think I still have the same energy and drive. It's just better funneled. And one of the ways it's better funneled is into thinking about people.
Yeah, I mean, that's a great comment, because nobody's ever got the right idea out of the gate. And there'll always be pivots and things that are changing in the business. You're not going to think of them all yourself, you know, but the people you have around you, they're going to create that for you, that success for you. And it's so important. I remember early hire with one of our businesses, and I interviewed the guy, and I was like the last step. And they said, "Oh, he's great. We love him. He's going to start with us, next week, whatever." He interviewed with me, and they went back down to the other guys and said, "The job's not for me." And they went, "What'd you do? You lost him." And I said, "I just told him what it was like here." And if somebody had explained to me that, I would have been my eyes would have gone bug-eyed. I'd be all excited. Let me at it. He just glazed over. He was looking for more of a comfortable, coasting kind of job, and it was a startup. That's not how that was.
That's right.
So it's so important to have those right people that share your passion and vision for the business. But
you're exactly right, Mike. And that actually turns my general point into a specific that I share. I interview every single person, even interns. And I will do that until we're probably 100 people because of that exact point. That culture you're building, the ensuring the fit, right?
Right.
And it's not, startup life is not for everybody.
It's not. I thought I was being motivating and exciting, and to him it was
scared him off.
Oh my God, I'm overwhelmed. I need to leave,
Yeah. Lucinda, let's talk about another part of all your energy and all. How do you balance working and your family through your career?
Oh, so for many years, I've had two girls, one's in college, one's in high school now. And for a long time, if you Googled me, the top result would be Lucinda Duncalfe says it's all about blend, not balance. And I still believe that, and that's how I do it. It's very difficult. I do more than half the housework. I did more than half, all that stuff like most other working women do, and it's fine. I don't feel bad about that at all. It just means that I mush it all together. So my husband has really funny slideshows of me on vacation on my iPhone, right? Walking, pulling the thing on my iPhone. Yeah, like that's you do. My favorite of those is my first daughter's about 3 months old maybe, and we're in the Plaza Hotel in New York because I'm at some conference and I'm laying on a bed. She's asleep on my chest. I have a cell phone and my computer laptop right there, right? Like that's how I've basically managed it. And I will say I love what I do. So people wonder, like, we'll use words like workaholic. I'm not a workaholic at all. I'm happy to stop and whatever. I actually wake up and I'm happy that it's a Monday, right? And so it's a positive thing to work a bunch. You just have to work the things together so they both get enough from you.
I used to get the same comment, about workaholic, and people ask me now, what are you going to do when you retire? And I'm thinking, well, I would be doing what I'm doing now. Exactly. I don't know that there's going to be any difference,
Exactly.
Yeah.
Well, I tried it, Mike, and I don't recommend it.
Right. Okay. I'll take your word for it.
Well, Lucinda, we're about to wrap up the show. So just any last minute comments or advice to people who want to follow your footsteps? Young people?
Oh yeah. Well, I guess first of all, thank you so much for having me. I really enjoyed reconnecting. And the advice that I give is pretty consistent: is if you want to do it, do it. I ask one question of myself whenever I start to get hesitant: is what's the worst thing that could happen? Yeah. And almost always, not always, but almost always, the worst thing is really not that bad. It's like, oh, I failed, and that's crummy to have to tell people, but it's not that bad. Versus you're going to get so much if you try. The trying is so exciting and fun.
Well, you're certainly exuding energy. So happy, successful. My hat's off to you. So we'll have to wind up the show. I'm sure we'll have you back again. But hopefully not another 15 years.
Right.
So thanks again, and best of luck to you and your family.
Thanks so much. Pleasure. Bye, guys.
Yeah, thanks, Lucinda.
So that ends our interview with Lucinda, and I just want to say our next guest will be Paul Vasasky, who's a principal with Stony Hill Advisors. So on this show, just remember that your money matters.